What a day it was in the markets today, with CPI news hitting the floor, coming out cooler than expected. In this video, I'm going to talk about the trades that I am looking at, as well as the ones I'm already in. We're going to react to some of the numbers, and we've got to talk about gold and the dollar in reaction to all of this news, as well as, it just doesn't stop. Tomorrow, we have the Fed meeting, which should ramp things up yet again. Let's jump in. So first of all, guys, I wanted to show you, just in case you missed the numbers, here's what happened in terms of CPI news this morning. CPI year over year, headline inflation, came down to 4% compared to the 4.1% that was forecasted. And the number is in. We're seeing gold come down briefly for a moment there, euro flipping in both directions here. Dollar shot up and then came right back. Euro now rallying, gold now rallying, S&P now rallying. Oh my goodness, look at this, guys. We must have had something come out. Let us know if you guys have the numbers. Oh my goodness, look at this. The S&P shooting up. Did I stay in my trade? I did. Very nice. Back up above the previous highs, about 1571 on this trade. Not wanting to quit here. That's awesome. So let's see what the numbers are. It must have come out here. There we go. We had 4%. Oh my goodness, 4% year over year. We did actually beat expectations for inflation. This has got to be bullish for stocks. Not only is this better than the forecast, it's also a full 0.9% drop from the previous reporting of CPI year over year that we got last month. So this is a really big win for the Federal Reserve and for generally risk on markets in general. We'll talk more about this as we get going. This is, of course, very not great for the dollar, but it's excellent for things like the indices, for gold, etc. We'll talk more about our gold in just a second. Core CPI came out as expected, 0.4%, so nothing too alarming there. And CPI month over month rose by 0.1% compared to the forecast at 0.2. It was a knockout victory for people who are watching things like the indices and for dollar bears out there. First of all, let me show you guys where I am positioned. I'm long on this move, the S&P. I have been long since Friday, and here is my trade. I'm logged into my brokerage, no nonsense here. This is an account that I trade my indices and gold positions, and I'm currently still long on this S&P move that I caught last week. At this point, this move has become a massive winner for the account, and on this trade alone, $17.81 in profit. I also have some positions on silver, so overall today I am up 4,000 between everything in the account, which includes my options trades, some of my crypto stuff, the S&P trade that I've got, and overall a very, very good day where I am positioned pretty heavily on the risk on side of things. Now, in terms of where I'm at with this trade, I picked it up Friday, shared this inside of the group, and I've been able to trail stops twice now. Initially, I moved my stops up to this point when we broke higher, and now after today's candle, I went ahead and put my trailing stop just below this swing low. So I'm in a great spot with this trade, and we've been riding it inside of the VIP group for the last few days. Now, in terms of that, let me show you the trade. So this is the initial trade. You can see the S&P officially declared in a bull market. We had cool inflation numbers, which were in fact confirmed today with the CPI, better than expected even. Solid technical breaks and retests, momentum play, and I had my stop loss pretty tight on this one. A beautiful trade that I wish every single day was looking like the reality of trading. It's not always this easy, but this is a winner. We caught a really good trade inside of the group. If you're not already inside of the group, you can get all of the entries and exits being shared, and right now everything is 50% off. If you've been watching for a while and you are interested in getting access to our Discord trade alerts, you can see all the trades that I take with entries and exits, myself and Frank, who is the gentleman on the left there. Him and I have been trading for a number of years together. Frank trades currency pairs, gold, and sometimes indices, and I trade heavily on the indices and gold side with some currency pairs mixed in as well. I also trade options and things like that, all of which you get access to when you become a member. And again, it's half off. To get access to this sale, all you have to do is message us down down below at the top of the description. There will be a link, and that link will take you to, I'll show you what it looks like. So once you click that link, it takes you to our live chat support group, which looks like this. So click this, it'll open up a live chat, and just do this real quick. Hit 50% off VIP sales. If you guys message the support line that's linked down below, they'll give you 55% off, because if you're a regular viewer of my channel, it's an extra big discount for people who are subscribers who've been wanting to join the Discord. The reason we're doing such a big sale discount is it's summer, we're doing a sale for fun, but also because we want more serious members to join the Discord, which once you're inside, you'll also get access to the chat rooms, so on and so forth. So click that link and message someone for that extra big discount available today. So I'm still long S&P. Now I want to talk though, where I'm really interested in talking today is gold. Many of you guys who have been watching the channel know I've been looking for a gold trade on the long side, but I haven't really had my chance to do so. We, again, despite this number, see gold pulling back. And I'm going to be honest with you guys, fundamentally, I'm really pretty bullish on gold. I think that this signs of cooling inflation very well could, continue to be something that gives pressure to the upside for gold, right? As the Fed may be less likely to raise interest rates. I believe that right now forecasts tomorrow are 90+% that we hold for the June meeting from the Federal Reserve. And the Fed in terms of July is where things now are paying attention to. It's pretty much set in stone that almost certainly tomorrow we will get a hold from the Fed, meaning interest rates will not be rising, which is of course a bullish thing for the metals market, as a stronger dollar lends to pushing gold down, as it makes it more costly for people to buy gold, both domestically and abroad. And so generally speaking, we'll be looking out, in my opinion, I'm looking for breaks, but we're not there yet. So we've had a choppy, crazy market day where we went back and forth, but we haven't been able to close above. For those of you guys who are bullish on gold, like myself, I'm not entering anything until we get that break of 1970, or possibly if we get a retest down into 1940s, I might have to dip my hand into the cookie jar of longs. We'll see how that plays out. But again, I'm looking for either a retest of this longer term support zone around 1940, or a momentum breakout, which is my preferred trade, trading back up into the 1980s and perhaps even beyond. So that's my thought on gold. Again, here's a look at the 1 hour chart zoomed in. We are now coming back down into a supportive level. There may be some opportunities to pick up gold here if you're trading it on a lower time frame. In fact, I may have to look into this to see if this is something I want to do, but I want to show you guys some interesting stuff in terms of the smart money tracker. When we look at gold, we still see gold as a very heavy long positioned asset from institutional traders. So smart money is really long. We have a 79% to 21%, let's call it, ratio long to short in terms of futures contracts open by institutional traders. So gold is a buy from institutional money, and it has been for several weeks now. Despite that though, we've seen gold kind of chop back and forth. So there may be some opportunities for some long side that have just yet to materialize. So as it retests, again, my bias is long, both fundamentally, but also because big money is very long on gold. And so yes, we're in a choppy market. Preferably, I'd wait for some breakouts, but I'm still interested in possibly just building a position on gold as well. I mentioned also I have some silver positions. Let me show you those as well. On my brokerage. So I sold puts on silver. It's now coming back, and so my puts are not nearly as great as they were. I didn't buy puts, I sold puts, which if you're unfamiliar with options, essentially I sold and collected premium for allowing someone else to buy puts on silver, and we'll see how this one plays out. But again, that's a trade that I have open. I closed out of profits yesterday and actually reopened a new I sold new puts. And if you're not sure what this looks like, feel free to pause the video. This is my options trade room. If you're new to options, I am not extensively experienced with how options function entirely, but I've been trading for many years. So I know generally what I want to buy and sell and why I want to buy and sell it, but the options are a new thing to me, where I collect premium essentially for selling puts and calls. Yeah, that's a whole nother thing for another video, but that is another position that I'm looking to trade here. Silver, again, trading down to 23.90, along with gold getting a little bit of a beating here today. Let's take a look at some dollar crosses here. Euro dollar able to stay above, and let's start fresh with this. One thing I want to point out, if you're watching the hourly chart here, the euro has had an impressive run up, breaking through key resistance here. This level now acts as support. You can see it wicking off the bottom here and even retesting as we get going. If you're a dollar bear, there may be some upside here on the euro, in my personal opinion, especially intraday here as the dollar kind of strengthens again. You can see dollar shooting back up into this area. There's very possibly one of these breaks and retest opportunities on the dollar here today. We'll see how that plays out. Again, I've really got my focus on just that S&P trade that I'm in. But again, if you're a dollar bear, there may be some opportunities. And I don't actually hate the idea of looking at possibly trying to pick up a position on gold. Again, if I take that trade, you guys will see it inside of the Discord channel. Just head over to the Swing Trades channel if you're already a member. If I take gold, you'll see it there. You'll get a notification to your phone or desktop if you have those set up once you're inside of the group. So that's kind of where I'm positioned when it comes to gold. We had some great commentary on trailing out of positions today. And again, I think it's a great topic, especially when I'm talking about, my S&P trade. How do you scale out of trades? Well, we had a great conversation on that on the live show today between Frank, Tom, and myself. Check it out, and hope this is helpful to you. Tom, how do you, I know you have a strategy, I've heard it before, but for people who may not, how do you scale out of a winner? I mean, you've got that Euro Swiss franc trade. Walk us through how you scale out or how you play a winner. Do you trail? Do you just have a hard take profit? Everybody has their own way, but let's hear yours, Tom. How do you play a winning trade?
Yeah, so it's an interesting one, and I most of the time with trading, in terms of my entries, I'm super rigid. But when it comes to managing a trade, scaling in, scaling out, I'm super fluid. Like a lot of things in trading, there's a lot of contradiction, but very rigid entry plan. But when I'm in a trade or scaling in and out, it's important to be fluid, I think. So with regards to, coming out of a taking profit, for example, I'm in this trade, Euro Swiss franc, so far so good, things are going well. I entered roughly here, my stop's down here, okay? So what I do, guys, is once I get, if I zoom out a little bit so we can, let's see it on the H4, so we can see the bigger picture. So if I'm, okay, there we go. If I'm in this trade from here and my stop's here, once I get a risk to reward of 1:1, generally speaking, I will close 80% of my trade, okay? Because I like to secure profit. Who knows what, can happen? This is how I trade. I like to secure some profit. But that doesn't mean I won't re-enter that 80%. So let's say price comes up, it does this. I take 80% profit. I'm still got 20% in the trade, and I will trail that stop. I'll trail it from here to here and so on. But as this pair comes up, I've taken 80%, but when price comes back down to potentially another entry to come higher, I can put all of that 80% back in the trade. I can put 50% of it back into this trade and, build on the winning trade again. Again, my stop generally is below the swing low on the H1. And long as that H1 structure is intact, I am still correct with this trade. So it's very fluid how I manage a trade, and I'll take profit, I'll re-enter that profit, I'll take some more profit, I'll re-enter that trade all the way up to here. So it may not be that clear how I do it, but the idea is to be fluid when you manage a trade. Rarely will I have enter, stop loss, take profit. I will be in and out of that trade many times and manage that trade. I would say that's my real skill in trading.
Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.